Hello, everyone. I hope you're having a great weekend. Obviously, overall, the stock market is not having a great weekend, potentially. I mean, we may gap up on Monday, but the damage has been done. I've expanded my price bar to make it a little bit more easier for those that aren't used to my small chart patterns to read. But if you want to just look at this chart, you can see how this is all arithmetic, but you can see how tight the consolidation patterns look on the NASDAQ previous to this most recent mess in August. But you'll notice that the V-shape, 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 all these are little V-shapes. V-shape here, V-shape here, there's another V-shape there, another V-shape here. And this most recent V-shape bounce is turning out like almost all other V-shape bounces have the entire way since August, and that's by rolling over. But the volume on Friday greatly expanded. Clear distribution day. This is the first distribution day we had after the bottom attempt back on the 20th. So you got one distribution day, two distribution days. This is basically a distribution day since you're down over 0.25%, and then a fourth distribution day on Friday. So that's just too many distribution days in a row to think that these January 20th lows are going to hold. They still might, but overall, it looks really ugly out there. Same with the NASDAQ 100. And then whenever you compare that to the VIX, you can see that there was way more fear at the August lows than these most recent lows that we're seeing right now. And even if you go back to the January 20th lows, nowhere near the August lows. So I tell you what, technically there's no real fear out there. So these indexes can continue to implode. Actually, I want to look at the rest of the markets before I go to individual stocks. The S&P 500, not as bad. The NYSE either. Dow Jones Industrial Average and the Dow Jones Transportation Average all basically holding up better. But these indexes have already gone through a severe sell-off. Then more than likely the NASDAQ and NASDAQ 100 and the high beta stocks are going to follow. And you'll probably see these indexes not sell off as much because, like I said, they've already gone through their selling. They have a lot of defensive stocks in these industries or in these indexes, so I would assume these indexes are going to outperform on the short term compared to what might be coming in the NASDAQ and NASDAQ 100. The Russell 2000 also is looking pretty weak, down 2.87%. It wants to attack new lows, it looks like, and the XBI continue to sell off. The IBB, overall biotech indexes just do not look good. Nothing looks good. All of our operational models are still under sell signals despite the rally attempt and follow-through day in the overall market. And I tell you what, we're looking at very few names in our perfect speculator scans. This is a pre-perfect speculator scan that looks for stocks that are either PS quality and or are close to being it. And as you can see, you just have the bare ETFs in here. But the few names that are in here, First Solar, look at the First Solar consolidation pattern. So let's look at a weekly, and you'll notice that it's been a mess, ever since it topped back in 07, 08. But look at the uptrend in 07, how nice and smooth the basing was. It's getting a little better short term, but with all these gaps, all this, gap open, gap open, gap open, all these gap down here, gap open over here. The stock is very volatile, and the most recent pattern is volatile, but it's one of the few names holding up. But overall, what I'm trying to say is that this is not a good-looking consolidation pattern overall. And as we go through the rest of the names, ALR's done, HPY's done. Basically, they're bought out or have been merged or went private, whatever. I don't know what each of these have done. FXP in there, Yang in there, JBSS. This is one of the stocks that I was watching, one of my higher quality names that I was most interested in. But even you can see here, look at the most recent bases in 2015, 2016 compared to the entire uptrend since 2012. Okay, so this looks sloppy here, but does it look as sloppy as this does? Hell no. And then it got, tight again throughout 13 and 14, the uptrend here, and then once again, 2015 it gets wild, but it looks ridiculous, especially whenever I do expand my price bars and turn it arithmetic, because normally I look at log charts. But what we're looking at here is a sloppy mess, and I hate to tell you that. Those are the best names. BMA is the other remaining stock in the PS scans. Look at those bases. I mean, just like compare its uptrend here in 06 to 07, even 08 to 09. Compare that, or even the 2010 uptrend, to what we've been seeing even throughout 2014, 15, and 16. I mean, this is pretty insane. The price volatility in BMA. So can you trust BMA in the setup here? Absolutely not. And then let's even go to the ones that were in the perfect speculator scan that are no longer this week. Look at LXFT. Does that look like healthy price action and data and then LinkedIn? I mean, this is just insane, the price moves that are out there. CMN was a some quality name, pre-perfect speculator name at one time too, setting up. Look at it now. Look at Cube's breakout and reversal. Look at MAA's breakout and reversal. Look at ELLI, which is one of the stocks that I was still watching in my PS scans, not sure why. Compare its uptrend from 2014 to 15 with its most recent base, and you'll see that it's a sloppy mess. So overall, everything is just failing on huge volume, and I'm not sure what people are so bullish about buying the dips here, but look at Google, Facebook, the stock that we're short, Netflix, that we're now up 25% on since the reversal here on the, what day was this? The 7th. So overall, you know, things just don't look healthy at all out there. And the few stocks that we tried to poke, look at how they've been acting. So EBF is now a full sell. Confirmation closed below 50-day moving average, especially on higher volume. How quickly PLAB has turned to shit. So PLAB is a full sell with that complete rollover on Friday's session. STZ is a full sell. Look at that. That is unbelievable. To think that it would go through that support, sure, but this one and into this support level, no way. But especially as a food and beverage stock. So if you're going to see volatility in stocks like that, and then in what was the other one? I can't even. There it was. Yeah. So Lance, we took a small position in, got knocked out of half of it, and then look what it did. It gapped down. When stocks like Lance and STZ are trading like super high beta.com names of the year 2000, you can be sure that this is not a market you want to be long at all. Also, EGHT failed and ABMD failed. Cut loss levels were below the low a day. Thank God of Thursday's move. Friday, absolute failure. And I tell you what, if that one's going to fail, you can't trust anything because that was an earnings win. And I know that the chart pattern looks sloppy compared to anything that you see before. I mean, just look at how it trades. Even this is wild and crazy, okay? Back when this is going on, this looks wild and crazy. But then compare that to what we see now. So, you know, this is why I kept all long positions extremely small. Nothing ever went over 2% during this entire rally attempt. And right now, following stocks like failing like EGHT, I mean, because that looked really good as an earnings winner. But, you know, it's just that kind of market. So you got to be very careful here. Long positions are absolutely gone. They're done. Not interested in anything until the market can stage a real follow-through day. There might be some surprise long positions here and there, but like I said, this is not a market where I'm going to put 5% of my account capital in a name, 10% account capital in a name, in any name, or 20% of my account capital in any name. This is a market where if you're going to try to test long positions, you're going to have to keep them small. So the 1%, 0.5% long positions will continue until a real follow-through day. And to be honest with you, I'm looking to short any rally attempt. If these indexes can rally at all to the downtrending 50 and 200-day moving average and things still look ugly and everything bounces on low volume, I'll be looking to short any kind of move at resistance. It's unfortunate the way this sell-off started with this gap down to start January, not allowing us to really position ourselves heavily short during this downtrend. Then we got taken out of half of our inverse ETFs right here in my IRA, but you know, still have some short position, but mainly we're cash here. And I tell you what, I'd much rather be in cash here than heavily long this market like a lot of people I know. I know a lot of people still trying to buy the dips, and that's why nobody should even attempt to try to call a bottom until the VIX can at least take out the 120 highs. Much preferred taking out the actual August highs, because if we could do that, that would invoke some real fear in this market. Have a great rest of your weekend, everyone.